Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos, and here's what's coming up on today's program. Donald Trump cruises past his rivals in the Iowa Republican caucuses as the party begins choosing its next presidential candidate, while the Davos elite considers a prospect of another Trump presidency. Geopolitics also casting a shadow over Davos as shippers are warned that the Red Sea is too dangerous to navigate after Houthi militants hit a U.S.-owned commercial vessel. And diplomacy also taking center stage here. Ukraine's president arrives in Davos. He says his government is working with Switzerland to hold a high-level peace conference in the Alpine nation. Now, coming up this hour, interviews with the chief executives of the Chinese investment firm Primavera. We have DVF Founder and Chairman Diane von Furstenberg. But first, we had news last week that Deutsche Bank has been looking at takeover deals with European lenders like Commerzbank and ABN AMRO. Now, it comes as the company explores new ways to boost its valuation. Now, for more on this, we're joined by James von Moltke. He's the CFO of Deutsche Bank. James, thank you so much for joining us. Let's actually start on the economy and what markets are doing. And then maybe you'll give us some news on what you're acquiring. Just kidding. If you want to, we're here. When you look at overall the markets, there's been a mismatch with what we're seeing in the real economy and what markets' expectations for Fed cuts are. Like, where are you on this?
Well, look, my view is it's a bit of a pinch me moment that we've been going through, that the resilience of not just the economies but also financial markets to the geopolitical crises that are going on, to the rise in interest rates and the fight against inflation has been remarkably strong. Whether that continues, I think we're all hopeful, and the overall sentiment for 2024 is positive. And there are lots of good supporting factors for that positive sentiment. But I think the distance traveled so far has been surprising to the upside. Yeah,
what do you worry about in 2024? If we've had a positive year, and actually almost unexpectedly so, 12 months ago we were thinking that a lot of companies would default. What are you seeing in your books?
Well, you went to the right place. So take away the unknowns about geopolitics and all of the elections that are headed ahead. But the rise in rates, there's been a concern that the refinancing wave that would take place, particularly for the most sensitive areas in this regard, and commercial real estate top among those, would be tough. My own view is that whenever you see we're climbing a mountain of refinancings, it tends to get absorbed in the capital markets. I think the rate action since sort of late last year is helpful in that regard, and the overall market sentiment. But we would expect a significant increase in issuance this year as issuers address the refinancing waves that they have ahead.
What if it were to go wrong? Again, why are we so optimistic about the year ahead?
Well, as I say, you know, we work through it piece by piece, and whether different parts of the segments of the market absorb different elements of what needs to be financed, whether that's bank loans, today the private credit market, and obviously the public markets. I think there is the underlying resilience, strength, appetite to digest what still lies ahead.
How are you worried about the German economy? Again, in technical recession, I don't know whether this is a year where you kind of, you know, the German economy muddles through and gets better.
Well, as you saw, it was very light negative growth last year, which is, of course, disappointing. But it reflects the fact that Germany is going through some relatively significant structural changes. As it adapts to the world as it is, as it works through, you know, the vestiges of the energy crisis. We think, of course, you know, and Germany is resilient. Germany has a wide range of strengths that will come to the fore over time, but it'll take a little time. I think 2024 will be one of, again, relatively stagnant growth as Germany works through some of those structural elements. I think there is a policy mix. There are some of these strengths that should come to the fore this year. So we're very optimistic about the second half of 24 and into 25 as we get through some of those challenges.
So what does that mean for Deutsche Bank specifically? I know you're also coming out with your results in 2 weeks, so you can't talk too much in what we've seen so far. But what about 12 months from now?
Well, obviously, we care a lot about the success of our home market. You know, it's the largest part of our business, but because we're international, globally set up, because our business is serving, in particular, our clients' needs as a global house bank globally, and we're exposed, if you like, to all of the trends that are going on, many of which have been quite favorable for our business. So we think there has been a rate-driven benefit to the banking industry in 2023. We don't think that's over, so that as the short-term rate impact, as the pass-through benefits that probably meant in 23 the banks over-earned sort of go into history, the impact of long-term rates and where banks are coming from in terms of negative or very low rates for a long time will be felt over time. We look forward to participating in that, and also a recovery in some of the episodic activity out there. So financial market improvement, and also M&A and financing markets coming back, as I mentioned.
Are you optimistic about bonuses?
Look, it'll reflect performance in 23, and as you've seen in a number of different areas of the investment banking business in particular in 23, it had been a difficult market. I think we and our competitors want to pay for performance and work hard in our managing our incentive compensation structures to do that, and that's something we aim to be consistent on.
But if you look at the business, what's your biggest challenge actually in helping to run it? Is it talent retention? Is it hiring right? Like, what are some of the concerns that are?
We went through a wave of this war for talent that was particularly present in 22 going into 23. That sort of changed in the last, say, 9 months. Which, as an employer, you see as positive. A slowdown in that turnover and in the very extreme competition for talent is frankly good. But it was also a year, oddly 23, where a number of competitors like us could reposition our businesses and take advantage of a talent market that was unusually sort of in motion, I would call it, in 23. And that's something that we did through investments, among other things.
And so could that continue? I like the in motion.
I think it would slow down for us. I think we've built the platform to a place where we're very comfortable with how we're positioned. And I think it's important to make sure that the people who joined the platform last year get sort of, well connected to the Deutsche Bank franchise, to our clients globally, and then go from there.
So there's a lot of talk about who you're buying, whether it's a big company and M&A, and whether it's cross-border.
Well, look, we don't comment generally, as always, on M&A transactions, but what I would say is, for a long time, we've been proponents of consolidation in the industry, but we've also said that preconditions have to be in place to allow that to happen. As some of the coverage since the article on Friday has pointed out, the preconditions in Europe are quite difficult across a number of different dimensions. So we'll continue to watch the space.
Meaning what, valuation is hard, or it's just the visibility of what we're going through economically? Well,
what I'd start with is a lack of a single banking market in Europe, and the ability really to reap the synergies of a banking merger across borders. At the moment, because of essentially the rate movement having created what we refer to as a fair value gap on the bank's balance sheet, there's some strong financial arguments against it, making it difficult to afford from a capital perspective. I think the other thing is, and this is very much sort of where we've been for the past several years, getting the business as it is really, fit for competition, fit for the future, is a lot of effort. We've had a very full agenda, I have to say, over the past several years, and continue to have a full agenda at DB.
The markets seem priced to perfection. Is that a worry? What does it mean for volatility and how your traders? Look,
I'd say it depends on the market. I mean, I think credit markets and credit spreads have been unusually strong. We would have expected, given again the recession risks that have been present, the impact on corporate issuers of the rate environment, we might have expected a more difficult credit spread environment. I think equity markets have been quite constructive, but as we all know, relatively concentrated, at least in the S&P. So I wouldn't say price to perfection. I think there's still sort of opportunity for momentum. Yeah. And of course, the rate market has been I think, again, relatively benign, given the potentially persistent inflation that we continue to face in the sort of G20.
So if you look around the world, where are you most optimistic in terms of regions? Is it the U.S.?
Well, look, the U.S. has this remarkable strength in terms of the innovation, the size of its economy, its domestic consumer market. Those are wonderful things, and I think long-term, huge prospects, no question. AI, of course, for us and some of the things we're following, the impact of AI is likely to be quite significant, and of course there the United States is a leader. I would call out India as a market that has an extremely strong growth path ahead of it, and one that I have to say, and we as an institution, very excited about.
Yeah, what does AI look like? James, for you? Is it displacement, or is it just freeing bankers to do, things that add more value?
I think both. But let me start with, as a CFO, of course, cost-driven AI sort of use cases very close to my heart, and we're finding those, I have to say, and I think that has still a long way to run, the idea that we'll generate enormous efficiencies. But I think next to that, one of the most important things is just sort of the client experience that we can drive through AI. We're seeing it in many of the use cases that we've put to work, and we think that'll continue. And I think the third thing is innovation, particularly in product capabilities.
James, thank you so much for joining us today. That was, of course, James von Moltke, the CFO of Deutsche Bank. Day 2 here in Davos. Now, coming up, we'll also speak to Fred Hu, the chief executive of Primavera Capital Group, one of China's biggest private equity investors. That interview next, live from Davos, and this is Bloomberg. Now, Donald Trump has cruised to victory in the Iowa caucuses, cementing his status as a Republican frontrunner. Ron DeSantis finishing a distant second. Now, the former president's margin of victory was more than double the previous record for the caucus.
Importantly, we want to thank the great people of Iowa. Thank you. We love you all. What a turnout, what a crowd. It was a very special night. And this is the first, because the big night is going to be in November when we take back our country.
They threw everything but the kitchen sink at us. They spent almost $50 million attacking us. No one's faced that much all the way just through Iowa. You helped us get a ticket punched out of the Hawkeye State. We have a lot of work to do.
Our campaign is the last best hope of stopping the Trump-Biden nightmare. Thank you, Iowa. We're going to continue on. We're going to make you proud, and we're off to New Hampshire. Thank you very much.
Well, a U.S.-owned merchant vessel has been hit by an anti-ship ballistic missile fired by Houthi fighters in the Red Sea. Yesterday, the U.S. Department of Transportation issued a warning to merchant ships to avoid the area until further notice. Meanwhile, Iran has attacked targets in Iraq and Syria in retaliation for deadly bombing earlier this month. Now, the U.S. has condemned the strikes as reckless. Ukraine's president says there are plans for a high-level peace conference to be held in Switzerland. Volodymyr Zelensky is heading here in Davos for talks, and business and political leaders will meet with him to rally support for his 10-point peace plan. Earlier, the Ukrainian military said it had downed 2 Russian planes near the Sea of Azov, which is controlled by Russian forces. The Kremlin has declined to confirm the reports. We'll have much more from Davos. This is Bloomberg.
Welcome back to our special coverage from Davos. I'm Haslinda. Needless to say, freezing at -14. Now, investors who bet on Chinese stocks in 2023 finished the year largely disappointed as local markets missed out on a global equity rally. But with the sell-off pushing Chinese valuations to near record lows, some investors now see the potential for a rebound this year. I'm joined now by Fred Hu, the founder, chairman, and CEO of Primavera Capital Group, one of China's biggest private equity investors. Fred, good to have you with us.
Good to see you here in Davos.
Will we see a rebound in Chinese assets this year?
I very much hope so, and I think last year, as you pointed out, was a dismal year for the markets and for the economy. Chinese economy definitely underperformed, since the COVID reopening. However, I think the conditions are in place. The economy is going to be much stronger. Fundamentals are going to improve across the board. Above all, policy uncertainty is going to be reduced, clearly. So that will pave the way to drive confidence, and on top, of the dirty, cheap valuation across the spectrum.
Before we talk about those dirt cheap valuations, I mean, are you then saying that China is back being investable? Because we know when you take a look at foreign funds, they've either cut their exposure to China or made a complete exit from the Chinese market. Are they wrong in doing that?
Well, investors definitely saw a lot of uncertainty. They were puzzled or confused by the mixed messages from policymakers and regulators. They also saw the data, how the economy was doing, disappointing. So this combined together, they were net sellers, much of the last year. Again, right now we are at the kind of inflection point. There is evidence. The parts of the economy are improving and picking up. And I think, to me, the most important thing is the Chinese leadership has at last, grasped the reality, understand the gravity of challenges they're facing. So I think, people don't forget. China still has a lot of policy arsenal at its disposal, whether it's monetary or fiscal or regulatory.
And we have seen a loosening of those policies, and you're suggesting those policies are helping. What kind of deal flows are we looking at right now?
Well, on the policy loosening front, I think China has done a bit, but those policies are, I would say, piecemeal, tentative, and even stingy. So that's why the markets, were still very, very disappointed. So this year, I expect a much more robust policy response to revive confidence and stimulate the economic activity. So in the private markets, I think there's still a healthy deal flow because there are great assets, there are great businesses, there are great companies in China, which are just, overlooked and and undervalued.
You've remained bullish on Chinese tech, even though in the last 2 years we saw how negative the sentiment has been. Given the depressed valuations, are you adding to your exposure to Chinese tech?
So we have been actively, working to find high quality deals. We have been around for a long time. We have been, there in downturns. We have been there in bull markets. So this is not an exception. So the fact, this is still, 19 trillion US dollar GDP, enormously big. And within the economy, there are many exciting companies being formed, and where
like which companies? What's looking attractive? Where are the opportunities?
For example, in climate action, here is a big theme. China has really some of the world-class champions. A company could envision Shanghai-based. They are the best-in-class wind turbine, wind power company. So, playing a critical role in energy transition, not only for China but for the world. So they have really amazing technologies. They have really amazing business model and the ecosystem. So that's a very good example.
I want to talk about your fourth Asia fund, which closed at about $4 billion. How will you be deploying that fund? How much exposure to Chinese-related stocks?
That was quite a time ago. We have been continually looking for deals. So, broadly speaking, we still like, consumer-oriented, anything really, tied to the Chinese middle-class consumption. We like energy transition, climate action type of opportunities, and we like, healthcare. Out of the pandemic, with the middle class, people are much more conscious about health and, extending their lifespan as well as health span. So there's a lot more spending on healthcare and healthcare services. So it's very broad. We're not just trying to focus on one particular sector or industry or one particular. It's enormous in a continental economy.
Fred, you have intimate knowledge of China and its workings. We know that China says it is likely to post that 5% growth target for 2023, but people say there's no momentum. What kind of growth projections are we anticipating for 2024, 2025?
So I don't think it's any stretch, for China to hit somewhere around the 5%. Actually, China has the capacity to outperform that government target as long as the regulatory policies, the policy stance are aligned with the private sector entrepreneurs, with the investors. The problem with China is that last couple of years, we have experienced several policy shocks. Some of the actions, by regulators are not fully consistent with the free market, economy. That really, really hurt investor confidence. So slowly but surely, the government is doing, doing the course correction.
But people say that the biggest risk for those investing in China is actually Taiwan. Briefly, do you agree?
That's over exaggerated. East Asia has been the most stable, peaceful region, for the last, 50 years.
Fred, I'm sorry, we have to leave it there. Fred Hu, Founder, Chairman, and CEO of Primavera Capital. Well, coming up, Francine will be joined by fashion designer Diane von Furstenberg. They'll be discussing women in leadership. Keep it here with us. This is Bloomberg.
Donald Trump cruises past his rivals in the Iowa Republican caucuses as the party begins choosing its next presidential candidate. The Davos elite considers the prospect of another Trump presidency. Geopolitics also casting a shadow over Davos as shippers are warned that the Red Sea is too dangerous to navigate after Houthi militants hit a U.S.-owned commercial vessel. And diplomacy also taking center stage here. Ukraine's president arrives in Davos. He says his government is working with Switzerland to hold a high-level peace conference in the Alpine nations. Well, good morning, everyone, and welcome back to our special coverage from Davos. I'm Francine Lacqua. It's day 2. Now, it's been almost 50 years since Diane von Furstenberg designed her iconic wrap dress, and it remains in demand as ever. Now, the fashion designer is devoting herself to passing on what she's learned over the years and celebrating other women in leadership. Well, Diane von Furstenberg is with us now. Thank you for joining us. I mean, this is an extremely important conversation about women in leadership, and you've championed women and represented women all of your life.
Well, let's say that I've championed being a woman. And then, I think that when you do it for yourself, then you open the doors for others. And that's what I've tried to do.
Why have you felt the need to come to Davos? We're in 2024. Are women's rights going backwards?
I know. Why have I come to Davos? Because they asked me to come and they asked me to speak. And it's interesting and to see what is going on, and I'm just thinking that maybe now we should kind of exploit the currency of kindness, and maybe we'll start a stock market of kindness.
Do you think that's been lost in recent years? It seems that in politics we're not able to speak to each other anymore.
Well, it's now we are living a moment where everyone is so polarized, and it's a shame because, we are all humans and we have so much more in common than not in common. And I think that it would be nice to kind of focus on that. And, after the me, maybe it should be a little bit more altruism. And but before being able to be altruist, what I tell every woman is that it's important to be true to yourself. And you build your own strength first, and then you attach it with other women.
Do you worry about what we're living through at the moment? Again, you champion women, you have awards, you're also trying to run a business and build the brand. What are some of the pitfalls you see out there?
Well, right now the world is very scary, precisely because people are in a state of despair, and therefore, everything is threatening. Climate is threatening. The distribution of wealth is becoming unbearable and unsustainable. So there's a lot of major issues, and the issues are so big that people are afraid, and a lot of and people invest in the fear. And I try to be the opposite, that fear is not an option, and taking responsibility of yourself first, and then carry your your own community and create community. But I do believe in survival. I believe in the light. I think we all should look for a little spot of light, build around the light, cherish the light, share the light, because at the end it's always the light that pushes the darkness away.
You're really epitome of glamour chic and New York. How do you think your New York is doing?
Oh, am I New York? Am I New York? I don't know. I was born in Europe. I was born in Belgium. I lived in New York, but I think the world is the world is my home, and what is really my home is that I'm a human being, and I think that what is more important than anything is to honor life, and I think we should all think about honoring life every day, and that may switch a little bit the selfishness.
You've also built your brands, of course, through the wrap dresses and much more luxury. How do you think the luxury space is going right now?
I think I would, rather than calling luxury, I would try to call it quality. I think that I created, 50 years ago, I created a dress. That dress is still selling. That dress is also selling in vintage stores. So sometimes you may grab one and see that 3 people have worn it, 3 generations. So that's sustainability. So I believe in quality of clothes, but I believe in quality of women, and I celebrate women and the beauty. Yeah. And for me, the beauty in a woman is eye contact, smile, and body language.
But the quality luxury world has changed since you brought that iconic.
Listen,
there's so much of it now.
I know, and the world is changing so rapidly, and but it's going to change more, and it's going to change faster, yeah. And we don't decide all of it. So that's why it's very important for each one individually to put our safety belt on. And our safety belt is being true to ourselves.
Is it changing for the good, or is it changing for the worse, or somewhere in the middle?
I think a lot is changing for the worst, and but I do believe in the good, and I do believe that out of the bad comes out the better, and I trust the young generation, even though I feel sorry for them, that they have so much to deal with, and we have given them that. So the more we can give young kids is to trust themselves.
But this is what climate change, of course, AI, I don't know whether it's geopolitics.
Yes, geopolitics, the wars everywhere, distribution of wealth, it's become unbearable.
Do you think about AI?
Do I think about AI? How can you not? And also, but AI will be, we will each have our own AI friend, our own AI alter ego. The problem with AI is going faster than any human can follow. And what I fear is when it reaches weapons. I don't like weapons.
I mean, not many people do if they're not controlled by humans.
I don't know that not many people like weapons. There's a lot of weapons around.
But does it change the business world? Again, in your world of fashion, I don't know if AI is an enabler or it means job losses, like from a business perspective.
There's job losses, but then we all live in a different way. I don't know, and nobody knows. I mean, I'm friendly with a lot of people in there. Nobody knows. And nobody knows. So all we have to do is, I believe in being good. I believe in kindness. And I think kindness is a currency that we should promote.
Diane, because of your work actually in women in leadership, do you think women in the last 4 to 5 years have found more of a voice because of the Me Too movement, or has COVID gotten that back?
Oh, I don't know. Women, it goes in and it goes back, but women are extraordinary, and women are always about solutions. When the most submissive woman in the world, if there's a fire in the house, she's the one who gets the jewelry, the children, and get it out. So I do believe that I do believe that women, in the moment of emergency, in the moment of dangers, women do take over.
So there
doesn't
not enough
look like it right now, but eventually.
I was going to say, I mean, this is, you know, one-on-one how to run a business. You want smart people with good instincts that put out fires or save the children in businesses. Do you think there are enough women in business at the moment?
There are women in businesses, but businesses do change, you know, how they operate. I mean, look how much has changed in the last 20 years. And so, you know, the internet just changed everything. I can live with, all I need to live is my phone. So I have my AI friend already.
What are you most looking forward to in Davos?
Oh, look at this. Look at where we are, you know. And I think that with all the problems and all the issues and all the inequalities, you come out and you look at the mountain and you look at the sky and you're happy to be human.
Diane von Furstenberg, thank you so much for joining us on Bloomberg TV. Now, coming up, the head of Norway's sovereign wealth fund tells us he's bracing for low returns in the coming years. We'll hear more from Nicolai Tangen, the Deutsche Bank chief executive, next. This is Bloomberg. The chief executive officer of the $1.5 trillion Norwegian wealth fund is warning of low returns in the next few years, with inflationary pressures likely to remain. Well, I spoke with him here in Davos about his outlook.
It doesn't look very good, actually, and we are not very optimistic when it comes to returns this year and the next few years, actually. And you know, if we start with rates internationally, I do not see them coming down as fast as many other people. I think we have some underlying inflationary pressures. We've got wages now, you know, wage demand really high in a lot of countries, and so that could lead to some, you know, spiraling of inflation going forward. So then you have some climate effects which are negative on pricing. You have geopolitics, you have trade routes, just a lot of things. It's just not a very happy cocktail.
But do you not see the world changing? So we were talking about the cost of credit, the cost of money, the fact that this is changing also for structural reasons, that it's not only because of the wave of interest rates that we've seen.
Yes, so money is not free anymore, and I don't think it will be for a long period of time. And so, of course, that has implications for you know, companies which have got debt. We are seeing it in the real estate market negatively, and so we are seeing it a lot of places. But probably we've seen the big jump in cost of capital. So from here, it's probably going to normalize a bit going forward.
But if you think that the interest rate cuts are not coming, is it because the U.S. economy is more fragile than we think?
No, I just think there is more underlying inflationary pressure, you know, and I think it's going to stay there for longer. And I do think the international central banks will be very, very careful in cutting rates too quickly because they were too slow in putting them up.
What does that mean for your returns?
Oh, I think they will be lackluster, you know. I think we'll have lower returns for the next few years.
That was Nicolai Tangen, the chief executive of the $1.5 trillion Norwegian sovereign wealth fund. Now, the head of Qatar's $450 billion sovereign wealth fund says he's worried about the commercial real estate market, but he'll continue to support London's Canary Wharf project as a long-term shareholder. Well, I spoke to Mansour Al Mahmoud about investment priorities and the global economy.
I think we have been fighting the inflation, and we have been bringing the numbers down. And this year will confirm whether we are, you know, we defeated the inflation or not. I think the market is also anticipating a cut, and there is a different views whether we'll have a big cut, like 6 times. I see this as unrealistic, but I'm sure if the numbers come down, I think we will see a little bit of cut.
But so when are you expecting, when you look at your priorities for investment this year, what do they look like?
See, priorities are, you know, we are active in all sectors, all the time, all the years. What matters are the themes that we have from year to year. For example, technologies. You know, we are very interested in enterprise software, digitalization, AI. AI is becoming very important technologies. It's a game changer. And we really value businesses that really embedded AI in their business models. Healthcare, is a big theme as well. A lot of AI could be used in healthcare. People are, very conscious about their health, are spending on this space. Government are starting to admit that they have not invested in healthcare sector, so a lot of opportunities will come to the surface. On top of this, you have an aging population that I think, science and biology will make sure to bring a lot of technologies and invention.
And I understand, of course, you're a long-term investor. Everything is, further out and takes years. But we have seen some changes in some of your portfolios, including, for example, for Barclays. So does it mean that you would likely to add, for example, to some of the or healthcare companies?
This is, you will see us from time to time exiting or reducing some of the exposure. And this is a normal activities. I mean, repositioning the portfolio is I think it's a healthy thing in our DNA. We still hold a big stake in Barclays, around 3%, but we are continuing investing in UK, in Europe. There is we are not signaling anything out of this.
Which is what I was going to ask you. You're also, of course, very invested in Canary Wharf.
Yes.
Are you concerned about commercial property?
I think commercial properties, yes, because of the leverage and cost of funding, it's becoming, especially if you have debt on some of the, also in the offices space, as I think it has a little bit of risk.
But you would keep it, or is it something that you'd be looking to sell?
No, we are keeping. Again, we are long-term investors. The good things that we have, stable financial capabilities, and we have a strong partner in Canary Wharf. We have agreed that we keep supporting the project, and it is not time to exit it by all means.
When you look at regions, are you more positive on the US than other parts of the world because of the strength of the economy? There are also many uncertainties in terms of division inwards and the elections coming up.
See, the US market is the biggest market for our investment. But nowadays, I see that other equity market might perform better. Japan looks very interesting. Europe looks better, by the way, in terms of the PEs. I think the market is anticipating a big cut, which is unrealistic from my perspective.
Well, that was the Qatar Investment Authority Chief Executive Mansour Al-Mahmoud speaking to us here in Davos. Now, coming up, Donald Trump cruises to victory in the Iowa caucuses, cementing his status as the Republican frontrunner. We'll discuss the latest developments next, and this is Bloomberg. Donald Trump has cruised to victory in the Iowa caucuses, cementing his status as a Republican frontrunner. Now, Ron DeSantis finishing a distant second. The result has been watched closely by the global elite here in Davos. Well, joining us now is Bloomberg's executive editor for economics and government, EMEA and Latin America, Flavia Kraus-Jackson. Flavia, so good to speak to you. I mean, there's so much going on in the world of politics, geopolitics, but actually, I don't know if it was a surprise that Trump won by so big in Iowa.
Well, that's the thing. I mean, he defied all expectations, possibly even his own, and the man does have an ego, as we know, and the weather was inclement in Iowa. Perhaps the biggest surprise, I think, is that Nikki Haley, who had been touted as like the number 2 and seemed to have caught up with DeSantis, actually sort of trailed. But, with this, the difference, of course, is that the rest of the world is not surprised like it was in 2016. They have had years to prepare. Many of them have, hedged their bets, and they have spent time in Washington, not just going to see the Biden in the White House, but also meeting with Trump's entourage. So even before Davos formally started today, Trump was the talk of the town, even though, of course, he hasn't been here since 2020, and who can forget that moment? But
so does his big win, is this a template for what he could do in other caucuses? We have New Hampshire, or I don't know if people are now saying, right, that this is it, he's definitely the nomination. And really
right, New Hampshire is going to be really interesting, right, because the whole slogan of that state is that, they're libertarian, they have their own mind, and if Ron DeSantis and Nikki Haley are going to break through, they have to break through there. Once Trump starts gaining momentum, momentum, it's game over. And I'm afraid to say that, you know, a lot of people that we've spoken to here in Davos, but also officials around the world, and we've really done their homework, as have we, are basically bracing for the very real possibility of Trump 2.0. Now, of course, there are all sorts of surprises. You can't, you know, as Al Gore told you yesterday, it's not a foregone conclusion. But I think the main difference here is now people are prepared. They know what they're going to get. It's more of the same, but like really pumping up the volume, right? So nothing's off the table. You know, will he pull the US out of NATO? Will he throw Zelensky, who's one of the big attendees here, under the bus? Will he, you know, invite Putin, you know, to a G7 or something, or say that he should be part of the G8? Who the hell knows? But that's all very possible.
And so you were just saying, so President Zelensky, Ukraine is here. I mean, we have some actually, you know, heavyweight heads of state. I think in all it's like 60 heads of government and states, but Zelensky's getting a lot of attention.
Yes, and this, of course, is really important for him because he's seen himself knocked off the news, and we've seen attention on that very big crisis, you know, again, pushed aside given the events in the Middle East, and he's struggled to gain traction. Ukraine is running out of money, and you know he's here really to meet with very important people, like he's just met with Jamie Dimon, of course, who said God bless, and you know really is trying to sort of lead that reconstruction effort. And of course in the afternoon he's meeting with the likes of von der Leyen and other sort of Western allies. So the idea is that this is a big push for him.
And some of the most interesting characters, we also have the newly elected Javier Milei of Argentina.
Yes, now I'm sorry to disappoint, he's not bringing the dogs, but he is bringing his sister, and she's going to be sort of also carrying a fairly representational role. Lest we forget, she's
because
actually...
she has a role in the government?
She is a very, very, I mean, she's the right-hand woman. They're very close, and that's a very interesting sort of relationship. He's also meeting with Yoreva, so from the IMF, which will be very important, and he'll be one of the more colourful characters for sure.
And then Chinese president, Chinese premier.
Yes, that's correct.
So we do have. I mean, it's an okay turnout.
It's not bad. I know that we sort of like to say that Davos is not what it was, but this is it's back. Zelensky's here. You've got, of course, Macron is here. So that's also going to be very interesting. Although we're not quite sure what he's up to, but
yeah, so I wonder
I'm sure he'll make a splash as well.
I mean, with all of your years, we almost have to wrap it up. But are they asking for? Do they want to speak to investors? A lot of these heads of states to try and, or is it more for publicity?
I think that the main thing, what I keep getting from people here is that, this is where people don't have their watches, right? So all you need is that one important meeting, that one important contact to have. So
we'll be watching the space. Flavia, no sleep throughout the week. She's sleeping like 2 hours a night. She's editing and writing and breaking news. Flavia Krauss-Jackson, they're Bloomberg's executive editor for economics and government, EMEA and Latin America. Now, many more big interviews still ahead, including the NASDAQ chief executive, Adina Friedman, Intel chief executive, Pat Gelsinger, and NATO Secretary General Jens Stoltenberg. But just ahead, our exclusive interview with the central banker of France, François Villeroy de Galhau, governor of the Banque de France and member of the ECB Governing Council. This is Bloomberg Live from Davos.